Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks follow a Wall Street rebound. Japan reversing losses as the Bank of Japan deputy governor promises no more rate hikes while markets remain unstable. The yen is sliding against the dollar. Hamas appoints Yahya Sinwar as its new political leader. Picking the alleged mastermind of the October 7 assault on Israel is being seen as a blow to ceasefire efforts. Plus, Democratic nominee Kamala Harris picks Minnesota Governor Tim Walz as her White House running mate in a pitch to reunify the party's base. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, closely tracking some of the market developments this week. But as you see, once more, we are in for yet another day of green. On the screen, a better close for Wall Street yesterday with both the S&P and Nasdaq closing up 1%. But then we are seeing momentum overnight in the Nikkei. The Japanese index up another 2% this morning. No doubt this time fueled by some dovish commentary coming through from the Bank of Japan deputy governor. We're going to talk more about that with Avril in a moment. But the theme and the handover from Asia this morning is pretty positive, and it's extending into those U.S. futures as well. S&P and Nasdaq both seen entering into this session about 1% higher. And then two-year yields also in focus. As we were speaking about yesterday, we have come a very long way throughout the course of this week. On Monday at one point, we were about 25 basis points lower on the session, now back to 4%. The market is still pricing in about a 40 basis point chance of 40 basis points of cuts for that September meeting, 125 basis points cumulative by the end of the year. So even though we've come back, market expectations for Fed rate cuts this year are still pretty high. Switching over, I just want to highlight our terminal chart today, and that is vis-a-vis Aramco earnings. So they came out after our show in yesterday's hours in line with expectations. But there is something interesting going on here, and that is that they are maintaining the dividend of $31 billion. And as you can see from the chart here, this is the third straight quarter that the dividend payout has actually topped net income for the quarter. And it's even more pronounced if you look at that dividend payout versus the free cash flow that Aramco is sitting on, $19 billion, which tells you quarter by quarter we're seeing a net cash reduction, and that raises a big question about whether these dividends are sustainable in the future. So something to think about for some of those Aramco investors. All right, let's get back to markets though, with a check on how Asian markets are faring. Avril is in our Singapore studio, and Avril, lots of people are drawing on the commentary out of the Bank of Japan this morning.
Yeah, particularly from the Deputy Governor Uchida, because he says that they're not going to hike rates in the face of markets being unstable. And of course, future rate hikes is really what rattled markets in the past week after Governor Ueda refused to commit on what the terminal rate was going to be. So there is some relief in the markets. Those comments seem quite dovish. We see about a 2% move on dollar yen now, but also worth noting that given the BOJ now seems in a holding pattern, the driver for dollar yen might shift to the Federal Reserve. That's going to be what the focus is on. Now, we are seeing the Japanese equities for the second day leading the rebound in the Asia Pacific, but it's also worth noting how we actually already saw them paring gains from the open, and this was because of a surge in financial stocks as it appeared that yields in Japan had bottomed, and then they flipped to gains after those comments from BOJ Deputy Governor Uchida. Jumana.
Feels like the central bank is still very much in the driving seat for many of these markets. Avril, thank you so much. Right, the earnings are coming thick and fast this morning. Let me just bring you a couple that have broken in the last couple of minutes, starting with Cathay Pacific. First half net income has come in at 3.61 billion Hong Kong dollars. That is down 15% year on year. The first half operating profit at 6.02 billion. And they are giving a bit of commentary here, saying they are on track to reach 100% of pre-pandemic flights by the first quarter of 2025. So still not back to pre-pandemic trends, which is interesting. Also of note is that they have announced, and this was expected, that they would make some form of an announcement, but now we have it confirmed. They are purchasing 30 Airbus A330-900 aircraft. So they will be buying 30 of those Airbus aircraft. This is coming out of the earnings today. The aircraft basic price is about $11 billion. They have secured the right to buy another 30 Airbus A330-900 aircraft. So that is coming out of Cathay Pacific, though we are seeing a 15% decline year-on-year for net income. Not just Cathay Pacific, though. I want to switch over to Southeast Asia's biggest bank, that is DBS. Just to give you the commentary there, we got a beat. So net income for the second quarter came at 2.8 billion Singapore dollars. That is versus estimates of 2.68 billion dollars. Net profit growth is expected to be mid to high single digits. They're still saying that they see cost-income ratio to be around 40%. It's quite a low number. Second quarter markets trading income came in at $187 million. Commercial book NII growth, so net interest income expected to be in mid to high teens. So a beat coming through from DBS, which is Southeast Asia's largest bank. And speaking of banks, Goldman Sachs CEO David Solomon says the Fed will not take any emergency steps to assuage markets after the bout of volatility in recent days. He also told Bloomberg that the U.S. will probably avoid a recession.
Well, I do think that we're getting a correction here after a very strong run on the markets, and that might be healthy. In terms of your question about a recession, our economists have upped their chance of a recession to 25% from 15%. All of that, I think, is a little lower than the broad consensus. My view is that the best chance as we look forward is, the economy will chug along and we probably won't see a recession, but the possibility is not zero. It's never zero.
All right, let's bring in Ayesha Tariq, co-founder of MacroVisor. Well, it's been quite the week for markets. Interesting to hear David Solomon's commentary about the price action the last couple of days. First of all, he's painting this as somewhat of a healthy correction for markets. Is it healthy when the VIX spikes up to 60 and falls back again? Can you call it a healthy correction?
Good morning, Jumana. Thank you for having me back on this, spectacular week, let's say. Lots going on in the market. I do think it's a healthy correction. Although, you're right, the volatility spiked a little too much, and it was a scare. I don't think this kind of drastic market action is actually what's warranted, but we are due for a little bit of a rebalancing here. The markets had run up too much. Obviously, breadth was very, very narrow, and positioning was extremely lopsided. Yeah. And that's part of why this happened so drastically, right? So you have everybody on one side of the boat, and then the boat tips over, and then, this is what you get. But the markets are settling now. I don't think we're done, though. We weren't a buy-the-dip notion here. But I think, we'll see a little bit more downside from here.
Why do you say that? Why do you think we're not done?
Because we have several factors here. We have earnings that are weakening. We have growth that is slowing. Mind you, I don't think it's recessionary yet, but macro data is weakening. And we are going into a tougher period in terms of seasonality, in terms of liquidity in the market. So everything considered, this is, again, a healthy correction. So we do see a downside target of somewhere close to 5,000 for the SPX. But we don't think that this is, going to be a sustained drawdown.
Yeah. So around 6% from here, if I'm doing the math correctly. How do you think central bankers are thinking about this volatility? And I want to pick up on the commentary that we had out of the Bank of Japan, because it is moving markets here. The Deputy Governor Ishida is saying the bank will not raise its policy interest rate when financial and capital markets are unstable. So clearly the Bank of Japan have been watching everything that's been happening with the Nikkei and the yen very closely. How are other central banks thinking about this, do you think?
So obviously, look, we want to say that they don't care about the markets, but they do. They obviously do care about the markets. We've seen that before as well, what was called the Fed put, right? I don't think they're going to take drastic action, though, because things are still quite stable. I'm sure they don't like the volatility, but just as we are explaining it, I'm sure they understand it as well, that it was lopsided positioning and it was something that was just sudden. Yeah. As far as the Bank of Japan is concerned, it makes sense for them to sort of ease the market a little bit, calm down the market, particularly after the drop that they've had. But I'm not sure if they can actually, say that they're not going to raise rates anymore. Yeah. It will depend on the numbers.
The data speaks for itself. You know what I'm trying to get my head around? I don't understand why the market is pricing in 43 basis points for the next September meeting. We had 1 week labor prints, and I was reading a lot of commentary about how this could be a one-off based on variable factors that aren't likely to be repeated again in the future. Why do you think the market is pushing or advocating for a 50 basis point cut out of the Fed in September?
Because the market wants easier conditions.
But they're setting themselves up for failure.
The market has always wanted easier conditions, right? Look, what the market wants, what the Fed needs to do, and where the economy is are three different things right now, right? The Fed will want to balance all of that. I'm not sure if they will be successful, but at the end of the day, the market has always wanted easier conditions, lower rates. We want to start a new credit cycle as soon as possible so we can start borrowing again. But in my opinion, a 50 basis point cut here would be a mistake. I think 25 is good.
It would also send the wrong signal. It would suggest that the U.S. economy is a lot worse than people are pricing in. Yeah.
Absolutely.
Yeah. Ayesha, we're going to leave it there. Thank you so much for joining me. Fascinating to hear your views on the markets from here. Ayesha Tariq, a co-founder of MacroVisor. Well, still ahead, Vice President Kamala Harris has selected Minnesota Governor Tim Walz as her running mate. We look at how the Democrats hope to broaden their ticket's appeal. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Hamas has named Yahya Sinwar as its new political leader, the alleged mastermind of the militant group's October 7 assault on Israel. Sinwar succeeds Ismail Haniyeh, a key mediator who was assassinated in Iran last week. The choice sends a message of defiance to Israel and the U.S. and is seen as a blow to efforts to broker a ceasefire. So for more on this, let's bring in Paul Wallace, who leads our economy and government coverage in the Middle East and North Africa. Paul, first of all, there was a lot of noise about who the next leader was going to be. Several media outlets were pointing towards other names before it became apparent that they'd selected Yahya Sinwar as their new political leader. What is the significance of this appointment?
So as you implied, that it was a surprise. The expectation was that Hamas would pick someone who was based abroad in Qatar, someone like Khaled Mashal or someone like that. They went for Sinwar, which, again, as you said, sends a message of defiance to Israel. Israel is obviously accused by Hamas and Iran of assassinating Haniyeh, and Hamas is almost saying, well, if you're going to go after someone like Haniyeh, who relative to many other Hamas members is a moderate, we're going to choose someone who's even more extreme. I think the main thing is it signals the concentration of Sinwar's power over the group, and that's something U.S. Secretary of State Antony Blinken spoke of yesterday. Interestingly, he didn't specifically condemn the move to choose Sinwar, but he said this just shows you that Sinwar is the person making the decisions when it comes to Hamas's strategy, and he's the one making the decisions when it comes to ceasefire negotiations.
And of course, it should be stated that he's still based in Gaza, so there's some logistical challenges as well. You've got to think about him being able to liaise with other members of Hamas, the negotiators who are attending these ceasefire discussions. I want to also draw on Hassan Nasrallah's speech yesterday. He gave another speech, a second in the last week. Many people were looking for more clues on what this potential retaliation could look like. We didn't get a lot out of it, but what he did say that I thought was interesting is our response is coming, whether alone or with allies. To me, and this is my personal read, it doesn't seem as though the response has been formulated yet. Otherwise, he wouldn't say that.
Yes, it seems as if Hezbollah and probably Iran too are still deciding, still mulling their options. Nasrallah did sort of imply that Hezbollah is going for targets deeper in Israel at the moment, which is obviously an escalation, but we're not at the point yet where they have started to retaliate properly for the death of that commander that Israel killed last week, Fouad Shukra. So we're still waiting on that. Nasrallah also said that keeping Israel waiting is part of Hezbollah's strategy. I think it plays into Hezbollah's hands and also Iran's. to keep Israel not so much in panic mode, but definitely in
high alert mode.
High alert mode, yeah. That doesn't, it's obviously not a good thing for Israel, its population or its economy, and I think that's something Iran and Hezbollah quite like. But the signals are that we will get a retaliation of some form from Iran, whether or not it's in coordination with Hezbollah and perhaps other militias like the Houthis we'll have to see.
Yeah. And the big question is whether the retaliation is going to create strategic deterrence or whether it's going to lead to further escalation. Big question for the region. Paul, thank you very much. Paul Wallace, leading our economy and government coverage in the Middle East and North Africa. Well, Democratic presidential nominee Kamala Harris has picked Minnesota Governor Tim Walz as her White House running mate in a pitch to reunify the party's base.
Got some work to do. We need to move to the general election and win that. And to all the friends, listen, we also need to level set. We are the underdogs in this race. But we have the momentum, and I know exactly what we are up against.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
Well, for more on this, let's bring in Kriti Gupta, Bloomberg's The Opening Trade anchor. Kriti, tell us more about Tim Walz. He seems to be a bit of a straight talker, but why him? Why was he selected, to your mind?
Yeah, well, Giovanna, in the last 24 hours, suddenly Tim Walz has, of course, hit national recognition. Prior to that, nobody really knew who he was, and that's actually part of his charm. The idea that he's coming from very simple Midwestern roots, really appealing to a crowd that might be more low income, less educated, and certainly from a part of the world, or part of the country, I should say, that was really exposed to more blue-collar workers. And this is part of the campaign strategy from the Harris campaign, that she wants to appeal to the folks that are voting in the middle of the country, not necessarily the coastal elites, which is one of the criticisms that she's facing, and instead really speak to the fact that she can, and her ticket can, and her campaign policy can, at the end of the day, cater to the folks that maybe aren't appealing to the kind of more higher educated, higher earning crowd, and instead are kind of leaning towards more of that populist choice. This is her way of undermining that kind of natural bid and that natural leaning towards a more Republican ticket.
Yeah, I mean, the major question here is whether the selection of Tim Walz is going to help her deliver on those battleground states. And that was one of the reasons people thought she may go for Josh Shapiro in Pennsylvania. What is the knock-on effect with the choice of Walz? And will it actually help her push forward in those battleground states?
Yeah, well, so Tim Walz is the governor of Minnesota, and prior to being governor, he represented Minnesota in Congress for about 12 years. So this is significant in the context that Minnesota, for our international audience, is a state right in kind of close by two very important swing states that could kind of determine the course of the election, Michigan and Wisconsin. And Michigan, of course, has a Democratic governor and a Democratic congressman and Democratic senator as well. This is significant because even though Michigan is a largely considered blue state at the moment, it still holds a very big exposure to that blue-collar base. Andy Beshear was another contender over in Kentucky, again, to really cater to the likes of the UAW president, Sean Fain, for example, who had endorsed some of his labor negotiations as well. So again, you're seeing this theme of this idea of really appealing to that kind of middle-class worker and expanding some of the rights for that. Tim Walz is also significant, not only because of his track record in Congress, where he has, by the way, voted more right relative to some of his more leftist, I would say, colleagues within Congress, making him the perfect centrist candidate for the Democratic ticket. He also has a history of being a high school teacher, military service, and of course, voting for legislation that include things like reproductive rights and freedoms there, food stamps, and the all-famous Taylor Swift bill, including, Jumana, that has things to do like with dealing with price gouging, for example.
I need to read up on that one, but definitely would appeal not just to some of those white blue-collar workers that you talk about, but Generation Z as well. Kriti, thank you so much. Kriti Gupta, Bloomberg's The Opening Trade anchor. All right, coming up, Kenya's rate cut surprise. We'll look at why the nation's central bank made the move for the first time in 4 years. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Kenya's central bank has surprised markets by cutting its interest rate for the first time in 4 years. The decision will be welcomed by Kenyans after deadly protests erupted across the country in June against proposed taxes on everything from bread to motor vehicles. So for more on this, Bloomberg's Ondiro Ganga joins me right now. A bit of a surprise cut out of the Kenyan central bank. What were the factors that drove this decision? Why did they decide to cut interest rates?
Jumana, there have been positive indicators all through. If you look at inflation, it's been on a downward trajectory from about 5.7% in March to about 4.3%. And also, if you look at things like food and non-alcoholic beverages that make about a third of the inflation basket, they've been stable at 5.6%. Transport is to 4.4%. Another positive indicator was the Kenyan shilling. It's gained 20% against the USD this year alone, mainly because of refinancing of the Eurobond that was maturing in June 2024, and also IMF and World Bank programs that unlocked more funding. And like you said, this cut, 25% basis points, was a long time coming, because since the hike cycle began in May of 2022, we've seen the central bank raise rates by about 600 basis points. Such a surprise, because only 1 out of the 9 economies surveyed by Bloomberg saw it coming. So now Kenya joins Mozambique, Madagascar, who've begun cutting rates. Are we likely to see more of it? More likely not, because inflation is still stubborn across the continent and currencies are not as strong.
And Ondiro, just quickly, how do you think this is going to influence or affect the economy?
Well, the economy is likely to receive this well. Industries that are capital-intensive, agriculture, manufacturing, construction, trade, are likely to be very happy with this news, because the economy has been faced with cash crunch for quite a while. Kenyans are going to receive it well because they've been out in the protests, or rather they've been out on the streets protesting the cost of living. However, is it going to make a big difference to them? No, because they're gearing up for another protest on the 8th of August.
Yep, very clear. Ondiro Ganga, thank you so much, keeping a close eye on all the developments in Kenya. All right, also coming up, Treasury steadied after 10-year yields jumped overnight as demand for haven assets returns after Monday's meltdown. More on the recovery with Dino Kronfol next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks follow a Wall Street rebound. Japan reversing losses as the Bank of Japan deputy governor promises no more rate hikes while markets remain unstable. The yen is sliding against the dollar. Hamas appoints Yahya Sinwar as its new political leader. Picking the alleged mastermind of the October 7 assault on Israel is being seen as a blow to ceasefire efforts. Plus, Democratic nominee Kamala Harris picks Minnesota Governor Tim Walz as her White House running mate in a pitch to reunify the party's base. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace over here in Dubai. A market check for you. We are seeing green on the screen. A better close for Wall Street yesterday. The likes of the S&P and Nasdaq closing up 1%. That momentum continuing into the Asian hours. Though we did see a bit of a roller coaster session once more for the Nikkei. At one point we were negative. Once those Bank of Japan deputy governor remarks came through suggesting that they were not going to act or hike further when markets were so unstable, we saw some relief come through. The Nikkei now up 2.9%. The yen losing some ground versus the USD. U.S. futures positive as we head into the U.S. session, and then 2-year yield sitting just above 4% now. I remember back on Monday we got as low as around 3.7, I want to say, at some point. So we've really backed up a lot since those Monday jitters came through. But the market is still pricing in more than 40 basis points for a rate cut in September, more than 120 for the year as a whole. Switching over our terminal chart today, drawing on those Aramco earnings that came out yesterday, and we spoke about the fact that the company posted a decent quarter, but all eyes are on that dividend payment. They maintained the dividend payment of $31 billion. Interesting chart here that really illustrates that this is the third straight quarter dividends have actually come out higher than that net income number that Aramco is generating, and even more pronounced if you look at it versus the free cash flow that's sitting on the balance sheet right now of 19 billion. And so the prognosis here is that they are paying out a bigger dividend than the net cash that the company is sitting on, raising questions about how sustainable that dividend actually is. So something to bear in mind. All right, let's also check in on how markets in Asia are faring. Avril, I touched on some of the price action that we've got in the Nikkei this morning, but give us more detail as to what's going on.
Suddenly, we're seeing Japanese equities well in the green. They're led by the banking stocks. The yen is losing further ground. This is all against the backdrop of what we got from the BOJ Deputy Governor Uchida saying we're not going to get those hikes with the markets unstable. Music to the ears of market participants. Flip the board because, as you see, we're talking about Japanese banks. I also wanted to talk through what we're seeing in Singapore lender, Southeast Asia's largest, DBS. We saw its net income beat $2.8 billion versus estimates of 2.68. Higher lending income was what it benefited from, but what really stood out was what we got from wealth management fees. And this is a hefty contribution. We also saw assets under management jumping to a record for the first half. Going forward, what's key to watch is the interest income growth because of these expectations of Fed rate cuts that could hit profitability. Indeed, this is among the factors that were cited by Citigroup as it downgraded some of these Singapore lenders earlier in the week. Jumana.
Yep. Excellent, and good to see the positive reaction over there in light of those better than expected earnings. Avril Hong in Singapore. Now, in the span of 3 weeks, the global sell-off has erased some $6.4 trillion from stock markets. Yesterday, the S&P 500 rose 1%, along with some of the worst-hit markets after Monday's meltdown, but the recovery remains fragile. Treasuries also steadied after the 10-year yield jumped 10 basis points overnight. So for more on this and more, Dino Kronfol, CIO for Global Sukuk MENA Fixed Income at Franklin Templeton, joins me here in the studio. Dino, it's great to have you with us.
Good morning. It's a pleasure to be
here.
Yeah,
it's good to chat to you. Let's just maybe start with the recent market turmoil. There's clearly a VAR shock has gone through the system. And even though we're seeing some stabilization now, I just wonder from your perspective, as you think about where you want to put your money for the rest of the year, whether the events of the last couple of days have sort of colored your thinking.
I don't think it's changed the basic view, which is, I mean, from a kind of macro perspective, we think we're moving from a peak rate environment into a cutting cycle, and that typically supports a long duration bias, which we've been maintaining, but it does mean that we need to be very careful around credit, and I feel like that's the area where we need to focus on more because the market seems to be recalibrating valuations, is thinking about risk assets. You've seen the volatility in equities, and we're beginning to see spreads also move wider. We're of the view that, going forward, we're going to start seeing more of a difference between the performance of high yield versus investment grade, and our bias is to remain higher quality for the foreseeable future.
Yeah, before we talk about spreads, let me just ask you about your duration view. Where do you see duration going? Where should 10-year yield settle once we get to the end of this cutting cycle?
I mean, that's the most difficult question to ask. I mean, in short, we don't know, because obviously it's going to be a function of where the U.S. economy settles. But if history is any indication, I mean, a peak rate environment, typically you see long-term rates come down, and we're starting to see that. But from when you start the cutting cycle, there's more than a 50% chance that you can make another 100 to 125 basis points. So we're of the view that the market is correct, expecting rates to come down and the 10-year rate to come lower. As it stands today, I would say something around 3.5 would probably be a sensible area, but the risks are also, I mean, if the market comes off or there's a harder landing, you could see that go lower.
Yeah. So let's talk about bond issuance in the region. There's been a ton of issuance this year, a lot more than there was this time last year. Given the market volatility as of late, could we expect to see this much issuance in the second half of the year and coming quarters? Is your expectation that sovereigns can actually come to the markets?
Well, I mean, you talked a little bit about Aramco earlier, and you can see that they are trying to maintain higher dividends. I think this is all in response to the fact that you're going to be running deficits in Saudi. And I think other countries also have pretty significant obligations, and that's not to mention the impact of all the geopolitics and, the price tag that typically, is associated with it. So you add to that a pretty high redemption cycle over the next few years from the borrowing that was taken out sort of, around the pandemic and the last oil price crash. I think we are in an environment where we should be expecting issuance to be above $100 billion a year for the foreseeable future. So that, coupled with some of the geopolitical uncertainty, with some of the downside risks possible with oil prices, to us means that spreads are still pretty rich and warrants, like I said, a bias towards much higher quality.
Okay, where is the higher quality then in the region?
So it's sovereigns like Qatar, the UAE, even Kuwait. So countries that have, immense resources, very low levels of debt, and then I think very positive current account and budget surpluses. Saudi will be a little bit more neutral, but they have enormous flexibility. I mean, people forget that if you look at the debt metrics, Saudi, for example, has debt to GDP today at 25%. They could borrow another 250 billion, and that number goes to maybe 45%, which is still well below, for example, single A cohorts.
Yeah.
So we're in a good place on a relative basis and an absolute basis. But we should be expecting debt to increase, issuance to increase, and spreads to come under some pressure.
Yeah, and underpinning all of this, of course, is the price of oil, keeping a steady eye on that. And what's interesting is, despite everything, all of the geopolitical risk in the region, the possibility of things really escalating, oil has trended very close to $75. What does a lower oil price, or if we continue breaking to the downside, $70, $65, let's say Chinese demand doesn't materialize, non-OPEC supply keeps picking up, what does that do to your investment thesis?
That puts a lot of pressure. I mean, I think, there's all of this effort in the region to diversify away from oil, but that is obviously still early days, and that hasn't materialized. So there's no doubt that oil prices have a massive impact on, the macro situation. So yeah, lower oil prices, I feel, will, compound the pressures that we were talking about for sure. But all of them have the resources to manage a downturn in oil prices. And I feel like the pressure on oil is arguably much more short-term. If we took a longer-term view, I think the dynamics are much more positive. But yeah, I mean, a $20 oil band, 70 to 90, is probably where we're going to be. But I feel that it's really interesting that oil prices are under pressure despite all the political tensions.
Yeah.
The fact that, the reason it's here is because of all of the production cuts in OPEC, all of which, by the way, is subject to sudden change. So I would be very cautious about oil going forward, and you have to budget that there is a possibility that it does trade lower.
Yeah. All right. Well, on that note, Dino, going to leave it there. Good to chat to you.
Pleasure.
Dino Kronfol, CIO, Global Sukuk and MENA Fixed Income at Franklin Templeton. Thank you. Now for a look at some of the other stories we're following. The UAE's Mubadala is taking an increasingly active approach to the European startups it backs as it seeks to improve returns. So far this year, at least 4 companies in Mubadala's European portfolio have undergone either major structural change, refinancing, or a replacement of leadership. The Abu Dhabi Fund says it has been working with companies to transition them to more sustainable and profitable business models. Mubadala is looking to become one of the world's premier venture capital players. Now, coming up, we speak to Dubai Airport CEO Paul Griffiths after half-year results show an increase in passenger numbers. That conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Dubai International Airport, the world's busiest for global travel, has seen a half-year record of nearly 45 million passengers. Today's results put the airport back on track to beat its all-time high as the aviation sector rebounds after the coronavirus pandemic. Very happy to say that Dubai Airport CEO Paul Griffiths joins me around the set. Very strong numbers for the first half of the year. Break it down for us. Where is the strength coming from?
Well, it's really, really good to be back and actually exceeding our pre-pandemic numbers for the first time. And we've got a forecast for the year of 91.8 million, which is also a record. Top country, India, 6.1 million in the first half, KSA 3.7 million in the first half, and UK 2.9 million. So fairly traditional markets for us that have seen strong growth. So we're pretty optimistic that actually this is going to be a record year and hopefully leading towards our goal of topping the 100 million passenger mark within, say, the next 3-4 years.
What is the max capacity for DXB?
Quite difficult to say because every year we manage to extend the capacity. We're building new aircraft stands right at the moment, for example. But investing in technology is really the way forward, making better use of the real estate we already have. We think probably 110 to 115 million, or we might be able to push it to a little more. So we've got quite a few years of growth left at DXB.
Yeah, but then, of course, there are plans to make Al Maktoum Airport operational. From what I've seen, for commercial flights, it's not going to be operational for another 10 years or so. So what happens if DXB hits full capacity in the next few years, if we get to that 110, 115 million number?
Well, we have a 32.5 million capacity already at DWC Al Maktoum International. So there is some overflow capacity available if Dubai International becomes full, which it will at some stage. So there is a migration plan. Some of the short to medium haul flights will migrate to DWC, which will leave us headroom for growth at DXB. We'll be able to cope. We've got a plan for every scenario.
Okay, that's good to know as someone who lives here. Now, a lot of the growth for the airport comes from the main airlines. You speak about Emirates Airlines, you speak about Fly Dubai, and what they have been talking about is delivery delays for some of the aircraft orders that they've made. To what extent is that also going to hamper some of the flow that comes through the airport because of the aircraft delays?
Well, this has been a worldwide issue because, of course, a lot of airlines actually retired a huge number of aircraft during the pandemic. And, of course, the deliveries from Boeing and Airbus in particular haven't actually kept pace to replace that capacity. So some of the airlines are affected. I mean, there's something like 4,800 aircraft outstanding for delivery at the moment on order books. Most of it are narrow-bodied aircraft. But we're seeing good growth. I mean, Fly Dubai has grown enormously, something like 18% over the last year. And the foreign airlines that come to DXB similarly have grown by 11%. So growth is still very much in the sector. And the airlines are prioritising Dubai because, of course, the strong traffic growth that we've witnessed has actually been quite a phenomenon here.
Yeah. I want to take you back to an incident that happened a couple of weeks ago. That was the tech outage that was caused by the upgrade from CrowdStrike. And, of course, we know it grounded many planes. There were lots of delays at the airports. First of all, how did you respond to this? And how will you provision for future events like this in case they ever happen again?
Well, we were very fortunate that we didn't really have any operational disruption as a result. We're not a major CrowdStrike user. But, of course, it does highlight the fact that you can become dependent on any single source provider of tech resources. And we actually had about 9 airlines that were affected that had delays, but we were able to switch those airlines across to our own passenger handling systems so that there was minimal disruption. So I think it's something we need to be increasingly aware of and actually making absolutely sure that we don't have multiple points of failure, which I think is the problem in a lot of airport systems worldwide.
I also want to ask you about, well, I was here my first week at Bloomberg, actually, was the week of the flooding, which was quite spectacular to witness. But, of course, that was another major event here, caused lots of disruption. First of all, talk us through the impact that it had on infrastructure. I know it was a couple of months away now, but how did it show up in these first half results? And then also, again, is there anything you're doing to bolster the infrastructure to sort of weatherproof for future inclement events like this?
Well, again, we were very fortunate that the airport actually didn't have a huge amount of operational disruption. The biggest problem was the access roads to the airport were blocked for quite a long time. There's a huge program that I know is throughout Dubai to actually retrofit a lot of heavy drainage systems and to make sure that that doesn't reoccur. Actually, in the incident, we dealt with that fairly well. The difficulty was clearing the backlog of bags. We have over 100,000 bags we had to get back to their owners afterwards. I think there were a few lessons that came out of it, but we were pretty well coordinated. All of the stakeholders across the whole aviation sector, and in fact across the city, did a tremendous job to recover the situation, and we were back to normal business within a few days.
Yeah. Well, we have been covering pretty much wall to wall on the show the last couple of weeks all of the geopolitical developments in the region. To what extent is that affecting passenger travel into and out of Dubai?
Well, it's not affecting it at all at the moment. We're well used to geographic tension, I think, at DXB, and we just have to cope with things as they occur. We're always ready, actually, to deal with any unexpected situations. We have to reroute aircraft into alternative airspace routes across the region from time to time. It's not something that we're strangers to.
Yeah. All right, Paul, we'll leave it there. Thank you so much for joining me on the show today. That was Paul Griffiths, Dubai Airport's CEO. Well, staying with aviation, Cathay Pacific will buy as many as 60 Airbus A330neo twin-aisle jets in an $11 billion deal. The order overlooks an offer from U.S. rival Boeing for 787 Dreamliner jets. Cathay's latest deal with Airbus is its third in 12 months and caps its biggest plane spending express in more than a decade. It takes its order backlog to over 100 jets. Cathay also reported earnings earlier this hour, showing a 15.3% slide in first-half net income. Now, airlines globally have been posting lower profits as the post-COVID travel surge wanes. Now, coming up, Softbank is likely to report a small profit later today as past investment mishaps weigh on the company's earnings. A preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Investors will be watching Softbank's earnings due later today. Analysts expect the company to report a small profit, even as billionaire founder Masayoshi Son prepares his next big AI bet. So tech reporter Annabelle Jewelers joins us now. Annabelle, first of all, walk us through the expectations for this set of earnings.
Yeah, well, as you said, Jemana, it's that expectation around a small profit that we're going to get later today. We did have some shares of extra T-Mobile stock in the quarter, so that's something that could help. But there's still going to be valuation losses for some assets, particularly in the Vision Fund portfolio. We can get to that in just a moment, but this is going to really have a big bearing here because the expectation, there's actually 3 analysts that put this together, but in aggregate, we're expecting net income to come in at 1 billion yen. 1 billion yen, it's just $7 million. So it's really not very much for the entire June quarter. It's a big improvement from where we were a year ago because we saw a loss then of around 480 billion yen. But we did see bigger net profits in the past 2 quarters. And so it just tells us Softbank, it's not out of the woods just yet. And again, it is that continued drag that you're seeing. Hundreds of loss-making startups that are still in the Vision Fund or on the Vision Fund books.
Yeah, and let me just bring it to the recent market volatility. We know that the Vision Fund has a lot of investments in some of these tech stocks. They've been taking some stakes in key AI firms. With the pullback, are we likely to get a longer-term impact on some of their investment decisions or on their overall portfolio?
Yeah, well, certainly it just places that extra level of scrutiny because, as you said, when you've got these big swings that are coming through and more scrutiny on tech valuations in particular, it's that much harder when we know that Softbank and Masayoshi Son is looking to make their next big-ticket investment into AI. There's also that question around market volatility and how that bodes not just for Masayoshi Son's personal wealth, but for the ability of Softbank to get financing, because that's something else that could be hurt. Given that volatility that we're seeing. Of course, Softbank down on Monday, the most going back to 1998. Today, it's rising. It rose yesterday as well, but still you're around $50 billion lower from the record high that we had back in July. Softbank, as we said, has a large cash pile to deploy, so any sort of details we get around that, the companies they could be looking at as well, certainly something to listen for in the earnings later today.
Annabelle, thank you so much for the overview into SoftBank earnings. That's our tech reporter, Annabelle Jewelers. Now, for a look at some other stories we're following as well this morning, shares of Airbnb fell sharply in extended trading. That's after a disappointing outlook for a third consecutive quarter and a warning of slowing demand from U.S. travelers. Airbnb says it expects sequential moderation of growth on the key metric of nights and experiences booked in the current period. Disney shares closed higher in New York after the entertainment giant announced it is raising the prices of its streaming services. The price for its cheapest offering, Disney Plus with advertising, will climb 25% to almost $10 a month. Disney Plus without ads will cost nearly $16 a month, marking a 14% increase. The changes take effect from October 17th. And a quick look at markets before we head out, because we are getting a positive handover from Nikkei this morning. The Asian index up more than 2.5%. Actually, as we speak, it's up 3.3%. No doubt rebounding after those Bank of Japan Deputy Governor comments came through, suggesting that they will not raise the interest rate when financial and capital markets are unstable. So that green from the Asian session is translating into green for U.S. futures. All of the majors seen up and opening up in positive territory. The Euro Stoxx futures up 1.5% as well. So this is the picture across the board. Nikkei up more than 3%. But that was it for our show today. This was Horizon's Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe with Tom McKenzie. This is Bloomberg.